looking at the NASDAQ continuous chart, and you can pull that up on TradingView if you look in the lower left-hand corner down here. Okay, so NQ number 1 exclamation point. That'll pull up this chart, and I'll explain to you why it's important to have this tool in your analysis in a few minutes, but let me go through all the details here. If you recall, that SIBI I annotated a week or so ago, and I was highlighting higher time frame perspective. The SIBI, we graded it. We have upper quadrant, consequent encroachment, lower quadrant, and then the low and the high of it. I mentioned that we had relative equal highs, and I mentioned that I'm not trying to pick the top. So if I'm not trying to pick the top, then we're continuously looking for evidence or signs that it wants to continue. And I mentioned that seasonally, so from a seasonal tendency, we usually would be dropping down into the second week of June. And when I taught seasonal tendencies, I mentioned that if there's ever a time, we'll go to a daily chart real quick. If there's ever a time where the seasonal tendency is shunned, in other words, if it's not following the normal seasonal tendency, because seasonal tendencies, they're not panaceas, they're not be-all, end-alls. It doesn't mean it has to happen. It just means that it usually happens. And if it doesn't follow the seasonal tendency, many times that is accelerated to the opposite. So for instance, if I suggested that the index futures should have been declining to the second week of June, around the first or second week of May, and usually they drop down into the second week of June each year. If it's not occurring, that means that we're likely to have a strong impulsive run higher. Okay, so it would be kind of like rejecting the seasonal tendency. Now it's still a little too early to see without certainty, or with certainty rather, that that's what's unfolding. But I want to counsel you to look at a couple things over here, okay? All of these candlesticks make up the construction of the weekly SIBI. Okay, so these down close candles from here and here, all of this makes the weekly SIBI. If we look just above that, right in there, so 21,780 to 21,941.75. Okay, so you can draw that out as a rectangle or box, highlighting that on your charts. Going over here, if you recall, I mentioned that avoiding trying to pick the top, if it were to drop down, and I said this in last week's analysis, when price was meandering around here and it dropped down, I said if it drops down and goes below this low, I'd prefer it to perform as an institutional order flow entry drill. In other words, just bump into it this low, go down a little bit as we see here, and then reject it. And it came back up into this weekly SIBI. Yesterday's performance was rather impressive, and I want you to look at this, and then this high here, and we have consequent encroachment of the weekly SIBI. So if we use that, and we'll use this, I don't want to really see it trade back down into this old high. Reason why is if it's bullish, I would like to see it, if it goes any lower, I'd like to see it find support around the consequent encroachment of that weekly SIBI, which is what that dotted line is. And or just respect the volume imbalance. But in all of my PD arrays, the volume imbalance is the most flexible. Now, it can pass through multiple times, back and forth. But when it's inside a macro, or if it's just after a macro time where price would start spooling, then the volume imbalances tend to be a lot more significant, strong, more accurate, more precise. In other words, they'll do what you want them to do, like other PD arrays I teach. They'll behave better. Okay, but a volume imbalance, they're the least in terms of significance, but they're still very powerful when you use them at the right time. Okay, so keeping these ideas in perspective here going into today, just know that I would prefer that it not trade down to 21,337.50. I'd prefer that it respect $21,380, we'll call it, okay? And I would like to see it specifically utilize the volume imbalance right here. So I'm not sure if this is highlighting on the recording, but it should be a little arrowhead pointing to the very specific things I'm referring to in terms of price action. So if we see the volume imbalance there, when we drop down to lower time frames, for instance, like an hourly chart. Hey, Bailey. Hey. You over there snoring. So, see, we're already showing a willingness to get below with the bodies here, and it's happening in real time. So, this dotted line here, that's consequent correction of the weekly CIVI. Good grief, girl. This that CIVI, you want to mark that out on your chart, because I'd like to see if it can start to go higher. I'd like to see this act as an inversion fair value gap and find support. So the reason why I do my analysis on higher time frames, even if I don't share it in public analysis, the benefits of having the continuous contract is that when we look at the front month, okay, so here is the normal June contract for NQ. Okay, when we have this, the weakness of having front month analysis on higher time frame is eventually when you start going to the left and you look at it on a daily chart. See how spotty it gets? So how are you going to do any analysis on that from a higher time perspective? If you're only using the front month and you're looking at monthly and weekly, yearly, quarterly charts, you're not going to get the meat that you're trying to get for high time frame analysis. There's no way that I'm going to risk a fortune behind anything with that type of stuff. So when we look at it with a continuous contract, you can keep going back, and you'll have data that's pertinent to what it is you're trying to use the higher time frames for. The higher time frame is best used when you're using a continuous contract because you're using front month data all the time. Like right now, our contract is June. So the front month contract, June NQ for 2025, it's limited when you start looking to the past. So by always using the front month contract, when we have NQ number 1 exclamation, it fills in all of that discrepancies that you would see by using higher time frame perspective on the front month because they're limited. they're not actively traded until they become the front month and the previous month expires. Okay, so let's drop down into a 15-minute time frame. I don't want to make this video too long, but see how it's showing the bodies, at least initially, respecting that volume imbalance. Okay, so the wicks are allowed to do the damage, as we see here, but I want to see it show a willingness to say, nah, I'm not going to go below that. That's sufficient enough. Okay, so it's the only problem with having the those rectangles on your thing and you don't lock them on. You can lock them and it doesn't give you this problem that whenever I try to navigate, it'll hang up on me in front of the recording's production. So we have relative equal highs here. And then we have that old high. And I don't want to, see, I just messed that up. It's okay. Let me just remove it. It's actually better for me to get rid of it now. I can always add it back to it with the weekly chart. Okay, so watching these two wicks, you want to get a measurement on consequent encroachment. If I can get the show up here. I can't do it when the drawing thing's on. Okay, so I want to see price get above it, respect on the body, consequent encroachment of these wicks, and then attack that buy side there. Look at all this price action. All this in here. That's balanced price range. So if we can climb higher than that, that's very significant because it spent a lot of time banging around in there during the London session. Note relative equal highs. Relative equal highs. And then track it with the continuous contract as it reaches towards the high of that weekly SIBI. And if it goes above the weekly SIBI, then we can look at that next higher premium array in the form of the continuous contracts fair value gap. Okay, so I gave you those price levels at the beginning of this video. So with that, that's what I'm looking for. I want to see if it's going to show a willingness to find some support using the volume imbalance or the consequent encroachment of the weekly SIBI. If it gives up the weekly SIBI, consequent encroachment on a body basis, then we're going to either go lower or stay range bound for a little while, which is not what I want to see. Okay, so one of the questions I get all the time is how do I know the price is going to continue moving or if it's going to reverse or if it's going to go into consolidation. I just outlined that right here with you. So those are things that help me determine those